And this is episode 363 of the Orange Pill Investor. And today I'm going to talk about volatility. We've heard it a million times. Volatility is vitality, blah, blah, blah. But I was watching Preston Pish on Seyfedina Moose's podcast. And sometimes I miss out on a gem. But occasionally I'll find one if I just, especially if it's a new podcast that I'm not used to. I'll just go to their YouTube channel and sort the videos by popularity. uh, you know, you don't always get the best just because everybody else thinks it's a good one. But this particular episode was um, was one of the more popular videos, and I had never watched it. And I actually want to show a little bit of it, just a couple of minutes. And actually, before that, because what I had really intended to talk about was this video that Rob posted at Waffle Goblins. Well, I gotta say, that's the coolest Twitter handle besides my own that I have found. And I'm honored that he's named himself after my waffle butt story that I told on Tim Kotzman's show. I, um, I think that's awesome. But anyway, he's got some great analysis on strategy and also on Misty and how Misty may be affecting the options market. But this kind of ties into what I was talking about or what I was thinking about when I heard Preston say what I'm about to show. And but yeah, I mean, this guy's criminally underfollowed. So like, go out there and give him a follow. I mean, like, what are you, dumb? Like, follow the dude. It's kind of insane. Um, all right. So with Preston's video, here we go. So Saifedean is talking about, uh, he's just talked about like, the money supply and, yeah, we'll just get into it.
And yeah, it would be great if Satoshi had invented some magical way where Bitcoin was appreciating at a fixed, steady rate with no dips. Imagine if we just set it at 40% a year, guaranteed, algorithmic.
Yeah. In game theory, volatility is a tool that a game designer uses to allow participants of different skill to play the same game. So, as an example, let's say you and I are playing chess. Let's say I'm an amateur. Let's say you're like incredible. If we would introduce a dice into the game that the weaker player, which would be me, could roll. And maybe I get two turns if I have an even number, and I only get one turn if I roll an odd number. Because I'm introducing this volatility into the game, the weaker player, me, has a better advantage to compete with the person who has a ton of proof of work and is the skilled player in the game, which would be you. So when we look at Wall Street, and we look at how skilled they are in financial markets to be playing this game against somebody who's, the 80 IQer, that volatility that Bitcoin presents in the market is actually providing this opportunity for them to play a game that normally they would get annihilated at, but has the opportunity to play really, really well. So when people talk about the volatility and how fierce it is, I think that it's a huge advantage for non elite or like highly skilled players to come in and just like compete on a level that they've never been able to do before.
Yeah. So that one really caught my freaking attention when I was walking the dogs, and I immediately just screenshotted the timestamp because I wanted to talk about it. And yeah, like, this is how we win. The big institutions, they've got uh, you know algorithms and freaking bots out there, and they've got people that they can pay hundreds of thousands of dollars to do analysis, and they got a bunch of money that they can use to manipulate the market up and market down. But we, as retail traders, have the ability to be more agile because they're so big that, and a little bit too smart for their own good sometimes. And Rob Waffle Goblins was actually demonstrating in his video how like this stair step leading up to November, you could kind of trace that back to them having to cover their weekly positions. They were covering, 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 covering. And then all of a sudden, it's like all of this, tension was building. And then bam, how do you cover this shit? Um, but then, of course, IV was through the roof. So everyone was selling volatility here. And then it just got crushed. And I know there were a couple of people that were very critical of instruments like MSTY because they were basically blaming them for this $500 top instead of a 750 top or $1,000 top or whatever. And there may be, whether that's true or not, without them like coiling the spring and continue to try to roll and cover and roll and cover and roll and cover, then maybe this would have never hit 500 to begin with. Maybe this would have only went to 400. And if it only goes to 400, maybe the correction doesn't go down to 250. Maybe the correction only goes down to 275 or something. But if we can be, nimble and it's going to take some if you've got your, 9 to 5 job and you can't keep your nose into the market all the time, maybe you're not going to be able to catch this. But I mean, you don't have to catch it exactly. Like if you caught 400 instead of 500, or even if you were like, oh shit, maybe this was the top. And if you got out anywhere in November, December as implied vol contracted over the next few months, you still made a shitload of money here. If you went long during this entire freaking 9 or 10 month period, and then maybe you didn't catch the top, but if you got out anywhere in here, I mean, if you took any exit position in November through December, then, you caught the top of the volatility, not necessarily the top of the price, but the top of the volatility. And so maybe it's not obvious, but I guess I'm talking to option traders here. If you want to just buy spot Bitcoin, and the right before I cut it off is when Safe starts talking about how people who um, just constantly buying the dip or DCAing or smash buying or whatever, they're actually beating these TradFi hedge funds and are basically dunking on them on Twitter all of the time because all they got to do is buy Bitcoin and wait. And so there's that. So there's just buying Bitcoin, and then there's just buying shares, and you don't have to time all of this stuff if you don't want to. If you want to buy shares, they don't have an expiration date. You can come back in 5 years and, you know, you can sign out of your trading platform and come back in 5 years if you want and just see, if you can retire or not. That's perfectly fine if you want to own the underlying asset. But if you're going to dip your toe into the options arena, now you're putting yourself on the clock. You have to win by a certain date. And options is all about volatility. So, I mean, there's even one of the Greeks that's that is involved in the pricing equation, and that's Vega. So if Vega is pumped, then the options prices themselves are going to be pumped. And you know, this implied vol chart is pretty handy. I'm not saying it's the end all be all, but when you get a spike like this, I don't think there could be a more obvious signal. Now, of course, you have to double check, but if you say, "Oh shit, there's a spike in implied vol," and then you check the prices and you're like, "Oh shit, yes, option prices are very high. This might be this might be a sell signal." And that could be a sell call or, you know, sell call signal for an option seller, or it could be a signal to close long calls if you're an option buyer. I guess I got to give the old not financial advice warning, blah, blah, blah. But this volatility could be the tool or the extra dice roll that we need in order to be able to outperform these whales out here. And it reminds me a little bit like it's just rebalancing, really. So even if you don't want to have to like necessarily be watching the implied vol chart, but if you have some version of a 60-40 portfolio, right? The old school way is you got 60% stocks and 40% bonds, and you're just going to rebalance. So if the stocks pump, now you're not going to be at 60-40 anymore. You're going to be at like 80-20. So then you take some profits on the stocks and then you buy some bonds until you're back to 60-40 again. And then maybe some crazy shit happens and there's a flight to quality. And then the bonds becomes 50% of your portfolio. And you sell off some of your bonds and then you get back to 60-40 again. So it's just rebalancing. And I hate to name drop the guy again after his shit coining, but Fred Krueger had a good video on the Kelly criterion and actually talking about selling your Bitcoin. And I know that's a heretical thing to say, but it actually does make sense, right? And you don't have to rebalance between Bitcoin and cash. I'm not going to hold cash because it's getting devalued, but the point is that if you do have something that you can trade into, we'll call it dry powder. And for me, it would be at least one other stock position. It won't be cash. Um, it's just a natural rebalancing. So if you have like a 5% leaps position and you're looking and you're like, holy shit, my 5% leaps position is now 10% of my portfolio. Maybe it's because of this. And even if you don't watch this chart, if you're paying attention to your rebalancing, then you know, oh, okay, it's time for me to take off half of my leaps positions because it's doubled in value. And everyone has to decide for themselves what risk tolerance they want to have. But yeah, I think this is it. Bitcoin is so volatile. It's it's adding that randomness to the game. And since strategy, if Bitcoin is letting you roll twice, then strategy is like letting you letting you roll 3 or 4 times in a row. Now, granted, if you get it wrong, like I did, I didn't I took my doubles roll in November and then like rolled snake eyes with it, right? So instead of taking this signal or taking this as a signal to take off a bunch of those leveraged positions, I kept at least 80% of them and and have suffered the consequences since then. But yeah, I think this is where it's at. I'm a big time gamer, so I loved the game metaphor, and um I think it's just another reason to if you're holding spot and you're not participating in any of these games, then yeah, you're probably pissed off about, you know, whatever. The gamesmanship of we're doing the ATM now, we're doing we're saving the convertible bonds for later. Why didn't Sailor bite the dip? How come he's not keeping dry powder? How come he's not doing this? How come he's not doing that? And but it can't just be number go up forever. The only way it can be volatile is if it goes up and then it also has to come down. So if you're an MSTR holder and you're gonna be like, okay, I'm gonna treat it like Bitcoin and you're gonna hold shares for 5 years, then you probably have nothing to complain about if you're up 2,000% since 2020. None of this volatility probably mattered. All right. So I just thought that was something fun to get into. So let me check the chats and then we'll see if there's we'll see what's happened to the price while I've been yapping. Colin says, Josh flipping bullish, time to send it. I gotta check out his tweets. The problem with I was doing a lot of account building early 2024. You know what I mean? Oh, what do I gotta do to get more followers? I gotta put out good content. I have to comment on people's posts and interact and all that good stuff. Feed the algorithm whatever it wants. And then at some point, there's just too much fucking content out there. If I um if I tr- if I tried to read every tweet and watch every video, I'll just do nothing else. And having low time preference as a Bitcoiner, we realize that the only thing that we have left is time. And it's like, even the guys that I follow very closely, sometimes I'll be like, "Oh, they said what? Oh, they did what?" And then I have to go and catch up. It's what do they call it? Drinking from a fire hose. So yeah, that's a good call out. I'm gonna have to go check out his post and see what he is talking about. J64. Oh, that's the perfect fucking tweet. Or just tune into my summaries. Exactly. Exactly. Dude, there's so many there's so many things out there to follow, but then there's like amazing, and you can call it a life hack or whatever, but people are out there doing the work and holding your hand and making shit easy for you. So Justin is like the hero we needed and didn't deserve with the summaries. That's for damn sure. Howard Howdy was hoping you would talk about Rob's video. Awesome. Yeah, I watched it on my phone, and of course, it was it was too small for me to see every little detail, but I bookmarked it. I'm gonna watch it a couple more times, um, because there's not a there's a lot of good content, but not all content is actionable. And I think his analysis was like, I mean, you can look at that and then you can just start picturing in your head, how am I going to take advantage of this personally? And yeah, I was super impressed. Hash says Buffett always said that retail has the advantage of playing the smaller markets and making decisions quickly. Larger institutions can't play in the same waters or act as quickly. Absolutely. We actually had that problem in the Navy. I was on a fairly large ship as a supply ship, and we had anti-missile missiles and we had chaff that we could launch to try to distract shit. But one of the main threats that we had was like somebody running up on us in a speedboat loaded with explosives. Like, what the fuck you gonna do? Um, Yeah, so being small and nimble can can be dangerous to others. Well, it can be dangerous to yourself too if you fuck it up. But yeah, hopefully we're not acting like suicide bombers in the market. I think that's, buying deep out of the money long calls for next Friday. That's that's the suicide bomber strategy maybe. Colin says the new school 60/40 is Bitcoin and strategy. Yeah. Yeah, I think, you know, it's kinda not even a joke, like, if strategy gets too expensive I mean, hell, that's what Sailor's doing, right? Some people were big mad that, "Oh, Sailor didn't buy the dip." I'm like, he's not really I mean, I guess if he you could keep a little bit of dry powder, I suppose, but if the number is gonna go up more than it goes is gonna go down, then having dry powder is going to backfire on you more than it's not going to backfire. I don't if that makes any sense. But also, unless the only way for him to create dry powder during that dip would have been to sell his strategy at 50% discount off of all-time highs just to buy Bitcoin at a 30% discount off of all-time highs. So that doesn't make any sense. But yeah, that was a tangent I didn't mean to go off on. But yeah, I mean, if strategy is going through the stratosphere, strategy goes up freaking 100%, and Bitcoin goes up 30 to 50%. Okay, then you peel off some strategy and you rebalance into your 60/40 Bitcoin strategy, portfolio. And over time, if you end up, you know, Bitcoin has to be the base of the allocation. Um, it can be 40/60, it can be 60/40, but as long as that Bitcoin stack is not going down, if it's going up, uh, that's kind of the important metric. And really it really just needs to not go down. And I wasn't sure if I should say this for another video, but Bitcoin is a zero sum game, right? There's only a certain number of them. They're infinitely divisible, but the whole point is that the pie is never getting any bigger. But even if your stack stays the same forever, you are getting rich for infinity because the price of eggs, the price of cars, the price of houses, the price of everything is going down in relationship to Bitcoin forever. So yeah, stacking sats is important, especially now because Bitcoin's volatility is going to go down. So this is when us as the the novice chess players playing against the big boys, this when the volatility is at its highest, this is when we need to be shooting for the moon. This is when people, the small guys can be all in, where, the big hedge funds are like, okay, we'll do a 5% allocation to Bitcoin. And oh, okay, maybe if we can convince the board, maybe we'll go up to 7%, Um, and by the time we reach the end game and it's time to tally up to see who's winning, we will have already made, huge gains from the volatility, by the time they can turn the ship around. Because in 50 years or 100 years or however long it takes, when Bitcoin's volatility has collapsed, So, um, you want to stack as much as you can, but people with small stacks shouldn't be, you know, turned off because they can only get 0.0001 Bitcoin or something. Like it's still going to be meaningful over the next several decades. And yeah, the 2020s is going to be pretty critical, I think, for people securing their futures. But the volatility does feel kind of bad sometimes. Cannot deny that. Patrick, I'm going to use Strike as my dry powder from now on. I think that's an excellent option as well. I I know some other folks that are considering it. Let me just look at Strike. STRK. Yeah, so Strike has fluctuated between 90 and 100. So the volatility is much less. That's just like a 10% back and forth, back and forth. And you're still going to be able to get that dividend payment as well. So this could be an excellent storage of dry powder, especially like, if the ratios do get too crazy and if the strike to strategy, I guess, price ratio gets too out of whack, I mean, you can always just convert to shares of strategy, right? Yeah, that could be a decent rebalancing as well. In other words, I want to rebalance my portfolio or hold cash. I'll use Strike for that. Yeah, I love it. Larry Fitzgerald, you were an awesome receiver. Do you worry about the flattening of the yield curve, its impact on a larger drawdown of Bitcoin and then strategy? I can't. I'm not gonna bullshit you. I'm not big on like knowledgeable on the yield curve and in macro, really. So what are you saying? Its impact on a larger drawdown of Bitcoin and then strategy. Not sure. All right, Howard. I was also wondering if there are signals for going long with the gamma neutral line and closing longs with overextending over the gamma max. I'm not sure about that either. Otherwise, do you look at the 200-day support only? The only the only big indicators I really look at, and I haven't added those lines to my graphs on the web-based version, is the 50 and the 200 simple moving average. And just in general, if the SPY is, hasn't had a death cross, then I'm generally gonna assume that the macro environment is positive. Um, but I could do the same, I do the same thing as well for strategy. But for now, I'm just gonna assume, which my assumption could be completely wrong, is that we're still in the bull market and that the 4-year cycle will hold up at least through 2025. Um, I don't have any reasons to think otherwise with the Bitcoin reserve, corporate adoption. Um, as far as I can tell, Trump probably wants lower interest rates. The US national debt can't support high interest payments. So all of that sounds like number go up technology to me. So I'm not really making any assumptions past 2025. I know some people are like, you know what, this is super cycle, the 4-year cycle's over, all models are broken, blah, blah, blah. And I hope that's true. But if I carry leverage into, long leverage into 2026 and that assumption is wrong that the super cycle is coming, um, then that's absolute catastrophe for those positions. So I don't mind being limited bullish after 2025, but I'm not betting on like Bitcoin doubling again or something. All right, let me see if I actually have to do any trading today. What's strategy at? 280. Okay. So I didn't talk so long that I missed a little bit of the pump on the day. We were at 290 pre-market and still holding at 280. So I sold and then just covered my 2 covered calls yesterday. Didn't I? Oh, and then I added them back in. Let me refresh. Hmm. Did they not fill? Yeah, they filled. All right, I guess I'm just confused. I don't remember putting this back on. I gotta go back and watch my own video. All right, so I do have covered calls on all of these 1,000 shares. So there's nothing that I can add on this somewhat of a, green day. All of my pouring men's covered calls are, cost more than I sold them for. So nothing to really do there. My long Septembers are the only positions I even have that are in profit. And I can almost double up on these positions. So I'm tempted to take some profits here, but I think I'll hold on to these for Friday because if we are, if all of these positions end up being, costing me money, let's say 10 positions, 2 grand a pop. If I end up having to pay 20 grand to close these, then maybe I'll sell these positions at a profit and take the edge off of some of those. I am kind of thinking about trying to wind up um Josh has been very public about his 314 call being the springboard. So I've been kind of thinking about trying to wind down on some of these short positions by the 14th. So we'll see. We'll see where I can get by that point. And maybe just uh, sit with a negative theta for a couple of weeks and see how that goes. Yeah. If we're about to get another rocket ship, I think I have way too many short positions on. Um, if that happens, there's no guarantee that it will, but I've also got a metric ass ton of long leverage. So maybe it's balanced okay after all. But definitely these very aggressive at the money covered calls. I will definitely take a pause on these. I'm satisfied with what I was able to do with them over the last couple of months and plowing all of that money into these long calls. But this time next week, 314 ish. And aren't we about to get a another earnings call soon? Is that end of March, beginning of May, right? First week of May? That could be interesting. If we start to get a little bit of a Bitcoin pump and then people start projecting what kind of earnings call strategy we'll have with FASB, I absolutely will not be carrying any covered calls over that FASB earnings call. That that could end up being a mistake. You know, you just never know. You can have a positive earnings call, and the market could be like, "Well, it wasn't positive enough," and the stock price can go down. But that does, if Bitcoin does, um, if the Bitcoin gods smile on us, and we can get a pump before the end of March, and we get a nice earnings report, that could be fun. That could be a fun time. Yeah. I definitely don't wanna have a lot of short exposure over what could potentially be fireworks on that earnings call. Yeah. The only thing that worries me a little bit is if we do springboard at 314, we get a bunch of, we get a big rally. If the Q1 earnings are disappointing, then all of that could just all of that could just come crashing back down. So this is this is kind of rough walking that tightrope sometimes. All right, so it doesn't look like I'm going to be making any trades today. I'm already locked into these positions, so there's really nothing for me to do here but wait for Friday and hope, well, not necessarily hope that I can close them at a profit, because that would just mean that we're under 260, and I would much rather be at 270, 280, 300, even 325. That would just be fine. Um, if I had to close some of my long positions to cover that, that would be just fine. All right, the joint account, same situation. My covered calls are all being tested, so there's nothing for me to do here but wait. And this is going to be real quick because I'm just going to be finding the same thing in every single account. Because I think I was already at the maximum number of covered calls. Now this one, yeah, all my poor man's covered calls are going against me. And then I've got oh boy, I sold the 255 in this one. So this one could be painful. We'll see what I have to do with this one on Friday. This one could be ugly, coming up with 3 grand to cover this. I can sell 4 shares, but that's only going to give me $1,200. So we'll see. Same thing in the 5K account. I'm already locked into my poor man's covered call positions and don't need to really do anything with these until like mid-March, since I rolled these out to 45 days. I don't think I have any cash to speak of. No, $300. Yep, whole lot of nothing. So all talk, no action today. Let's check chats, and then you know what? Okay, there are some YouTube comments. All right, I get paranoid with the comments. Sometimes YouTube works, and sometimes it don't. All right.